Hey everybody, welcome back to the Wealth Advisory's Top Stocks. We're on to February 2023. I keep wanting to say 2022 because, I mean, we're still so early on in the year, but 2023, wow. I remember, and this is going to date me a little bit here, but I remember everybody panicking when we were about to go from 1999 to 2000 and all the computers were going to crash and everybody's bank records were going to get wiped out because of Y2K. And so it being 2023 is just like mind-boggling to me. I can't believe it. I don't feel that much older. I don't think I look that much older. I hope I don't look that much older. I don't know. I look a lot older than I did back in 1999 and 2000, 20 as it were. But anyway, welcome back, guys. We made it through January. It was a huge month for the markets. Looking at my numbers here, the Dow was up 2.5%. The S&P 500 was up 5.5%. The NASDAQ up 10%. Huge for a month. But none of them could beat our January top 10 picks. Our average gain was 11.5%. That's amazing. We had a bunch of double digits. Freeport got almost up 20%. That was as of me recording this on January 30th. So it may actually be a little bit higher by the time you see it. It could be a little bit lower. We've got a big week ahead in the markets. We've got the Fed meets this week. Other central banks are meeting too. There's lots of earnings coming out, lots of economic data. But anyway, you guys beat the markets in a really strong month. So I want to congratulate you. What comes this month is sort of kind of still up in the air, what with all of that eco data and everything that we're getting this week. The Fed, like I said, is meeting. They're going to raise rates. That's definitely going to happen. Everybody's sure of it. Right now, the markets are sort of betting that there's a 99% probability that they're going to increase rates by 0.25% or 25 basis points, which says that the Fed's still hawkish. But there is a chance that they could raise it by 50 basis points or 0.5%. Either way, that's a sign that the Fed is still hawkish. They don't think that they've beat inflation, and they really want to see better numbers coming. They want to see better inflation numbers coming. They want to see employment numbers going the opposite direction. They actually want to see bad news on the employment front. They want to see the housing market cool off a little bit, and they're just not seeing it. But they remain hawkish. But the thing is investors don't seem to be buying it. The bond markets are pricing in rate cuts by mid to late 2023. Now, the Fed cuts rates if there's a recession or if it's worried that a recession is coming. It does not cut rates if it gets a soft landing. It does not cut rates if everything is well and good. It might stop raising rates, but it doesn't cut them unless it sees a recession coming, unless it sees economic trouble coming. So the bond markets, they think that there's a recession coming and they think that the Fed's going to panic and have to cut rates. But then you've got stock investors who are like super bullish and they are fighting the Fed every step of the way, sending markets up. Now, in the past, people have gotten into a lot of trouble by trying to fight the Fed. When the Fed is cutting rates and people are betting against the stock market, they usually lose money. So when the Fed's raising rates and people are betting on the stock market going up, there's a good possibility that they'll lose money. But maybe the Fed is not really as hawkish as they say they are. Maybe they're not going to do what they say that they're going to do. But we're going to have to find out later this week when we see how big their raise is and what the commentary sounds like. Does it sound like they're getting a little bit more dovish? Does it sound like maybe they're ready to slow down or stop these rate hikes? And I mean, does it sound like they're scared of a recession and they might be about to cut? We don't know. We'll find that out later this week. But for now, let's go ahead and get some top 10 stocks out there and give you our first 5 picks. As usual, we're going to do the first 5, and then we're going to cut the video off for everybody watching on YouTube. People pay to be members of the Wealth Advisory community, so it doesn't seem fair for me to give you all 10 of the stocks for free. I'll give you a taste, the first 5, which is really honestly a great head start. But if you want to get the other 5, you're going to have to join us as a full-fledged member of the Wealth Advisory, which you can do by clicking the link in the description below. I highly recommend you join. I mean, just one of the gains that we got last month could have paid for your entire annual subscription to the Wealth Advisory. So if you'd like to join us, I highly recommend it. If not, don't worry. I'll keep putting these out for you for as long as you're willing to watch them. Now, with that being said, let's go ahead and get into the top 10 and see who our stocks are this month. Like I said, we had a lot of winners last month. This was one of them, Americold Realty Trust. Its ticker symbol is COLD. Cold. Here, Make that look a little bit more like a C. There we go. COLD. Like I said, this was a big winner last month. We like to let our winners run here at the Wealth Advisory. Successful investors typically do that. You cut your losers, you let your winners keep going. And Americold is a real estate investment trust that owns cold storage warehouses. Now, this is a really recession-resistant industry. I mean, people need food, and food needs to stay refrigerated in most cases. And these guys own the big refrigerators that we keep that stuff in before it gets to the grocery store and then goes to your refrigerator at home. It's the biggest player. So Americold is like the biggest player in a very fractured market. They own about 20% of the market, and they're the biggest. So that tells you just how fractured this market is, which means there's a big possibility that they could consolidate this market, and we could see capital gains just from that. Now that's a long-term goal, but right now we love it because one, it's recession resistant, and two, it spins off cash dividends because it's a real estate investment trust. All REITs have to, by law, pay you 90% of their pre-tax income. Americold's one of those. Since rate hikes this month make it kind of hard to predict where the markets are going to go, we want income, we want stability. Those are key here, and that's exactly what we get with Americold. So for our number 10 stock, we're going with Americold Realty Trust, ticker symbol COLD. Now let's clear that one off. There we go. And now on to number 9, which is another real estate investment trust. We love REITs at the Wealth Advisory. REITs pay us income, and income's a great thing to have. It's a great thing to have in a good market because it gives you dry powder to buy more stocks with. It's a great thing to have during a recession because, hey, it's basically an extra paycheck. This is cash that you can use to do whatever you want to with. You can buy more stocks with it. You can pay your bills with it. If you collect enough of it, you can buy yourself a new house or a car or a fishing boat or take yourself on a fancy vacation. It is your money. It's yours to do what you want with it. And everybody likes money, right? Come on. So anyway, STAG is another REIT. STAG owns what's known as industrial real estate. So industrial real estate is like warehouses, distribution centers, light manufacturing facilities, basically all the things that have to do with e-commerce. That's a great example, is that in e-commerce, an e-commerce store needs 3 times the amount of space to store its things, the products that it sells, than somebody who runs out of a brick and mortar store. Because your brick and mortar store actually is a warehouse. But if you're just running it on a computer, well, you don't have a warehouse, you've got to rent space. And you need 3 times as much of it because you don't have any space. So anyway, this is a big real estate investment trust. They own a lot of properties. They focus on large tenants that can take up the entire property. So think companies like Amazon, Walmart, Expo Logistics, FedEx even. And anyway, rents have continued to increase in the industrial real estate market. It's basically the only real estate market that has continued to go up. It continued to go up in 2022. It's still sort of moving upward in 2023, while other markets have either plateaued or even started to pull back some. Their properties remain full, their rents continue to increase, the company is growing, and the dividends keep coming like clockwork. So again, this is more stability and more income to sort of combat any negative reaction to whatever the Fed does this week. So that's our number 9 stock, STAG Industrial, and its ticker symbol, which I forgot to mention earlier, is STAG also, S-T-A-G. So it's been here, and it's been here the whole time, and that's our number 9 stock, STAG, another REIT. We love the REITs for the income and the stability. And I think that's going to come in handy this month. All right, moving on to number 8. And guess what? It's another real estate trust. Like I said, we love the REITs. We love the income. We just love it. We love them. They're great business. They have to pay, like I said, 90% of their pre-tax income to shareholders. Sometimes they pay more. They cannot pay less. Otherwise, they lose that designation as a REIT. And as a REIT, they basically have to pay less taxes than other companies. So they don't want to lose that designation because then all of a sudden their tax bill goes up, and they don't want to have to do that. Equity Lifestyle Properties trades under the ticker symbol ELS. ELS, right? And like I said, we love it because it pays us steady income, but we also love it because ELS owns manufactured home communities and recreational vehicle campsites all across the U.S., right? And so this is a very recession-resistant industry. The RV campsites maybe take a little bit of a hit during a recession because, you know, people aren't taking quite as many vacations, but at the same time, the RV campsites tend to hold a little bit better than other, resort-type properties during a recession because, well, they're closer, they're cheaper, you don't have to book a hotel, you bring your hotel with you because you're driving an RV. So they are relatively recession resistant in that way. They're also recession resistant because mobile home communities are also known as trailer parks, also known as manufactured home communities, mobile home communities. But anyway, mobile homes, manufactured homes, trailers, those are a lot cheaper. You know, so if people are having trouble paying their mortgages, you know, paying their rent, then they're likely to downsize a little bit and go to a manufactured home, go to a mobile home, go to a trailer park. So that's why these can tend to be good in recessions. They're just sort of good all around. Warren Buffett loves investing in. I hate calling them trailer parks because there's just such that stigma with the trailer park. But where I grew up, there are a lot of really nice trailer parks. So we're just going to go ahead and call them that. But Warren Buffett loves investing in trailer parks. You know, he makes tons of money helping finance them. He makes tons of money collecting rent on them. And we're sort of doing the same thing here with equity lifestyle properties. It pays steady income, which, like I said, income I think is going to be very important this month and going forward. And it was a big winner in January. And again, like I said, we let our winners run here at the Wealth Advisory. So we're making it our number 8 stock for February. Okay, now moving on, we're going to get out of the REITs. I know, it's shocking. And we're going to go with a lithium company. So Albemarle is, like I said, not a REIT. It's one of the 2 largest lithium producers in the entire world. So it sort of shares the top spot with this company SQM. SQM and Albemarle are the 2 biggest producers in the world. I think right now Albemarle takes the cake, but they're so close that they sort of trade that top spot back and forth. Anyway, it's a U.S. company. It's based in, or headquartered in North Carolina. It pays a steady and growing dividend. So again, we're looking for that income. We love that income. We like it in good markets. We like it in bad markets. And when we're not sure what the market's going to give, we really like it. It's also in lithium, which is a long-term growth industry. And I mean, if you haven't realized that by now, I don't know what rock you've been living under, but it's time to get out from under it and join the rest of the world. We're electrifying everything, and we need lithium batteries to electrify stuff. Now, sure, there are going to be other options out there. You know, we've got hydrogen fuel cells, we've got solid-state batteries, but right now, lithium-ion batteries are what we are building the future with. So we're going to need more and more lithium for that. China coming back online, as I mentioned last month, also means more demand. It means more demand for lithium, more demand for steel, more demand for copper, more demand for oil, just more demand for like everything. If inflation continues, then resources like lithium should outperform the markets because they're priced in US dollars and those dollars aren't buying quite as much as they used to. So it's really, there's a lot of different reasons why we like Albemarle. Long term, huge growth trend for lithium. Short term, income, China coming back online, and the fact that it should perform pretty well in inflation. So Albemarle, before I forget, trades under the ticker symbol ALB. ALB. The first 3 letters of its name, it's not a REIT. So that should make everybody happy if you were getting tired of hearing me talk about REITs so far. And that brings us to our number 6th stock on the list and our 5th of the first 5. And that is the Guggenheim Strategic Opportunities Fund, which trades under the ticker symbol GOF. Excuse me. Now, like I said, this is the last of the first 5, and this is another income play. This is not a REIT. It's not a real estate investment trust, and technically it's not really a stock in and of itself. It trades just like a stock, but it's what's known as a closed-end fund, which is kind of like a mutual fund, but it's not a mutual fund. So you don't have to buy it in, an IRA or in a 401k. You can buy it in any sort of account. It trades just like a stock, similar to an exchange-traded fund, but it's a closed-end fund, which basically means that they're not creating any more shares of it. And anyway, it's the last of our first 5. It pays steady income month after month after month after month. It is not a big gainer as far as capital appreciation goes. It really trades in a very tight range. Buying it at the bottom of the range gives you the opportunity for capital appreciation. Buying it at the top of the range doesn't really, set you up for failure, because this one is all about steady income. Steady income is great. We love steady income. I have said that multiple times today. I'll keep saying it to drive that point home. If we head for a recession, it is an extra paycheck. If we're nearing a bottom and we start to get bullish again, it's dry powder to buy more stocks. And if we hit stagflation, it's yield to help you fight that inflation, that's chiseling away at the value of your dollars. So income is a big thing. It's a big deal. We love it here at the Wealth Advisory, and that's why our number 6 stock pick is the Guggenheim Strategic Opportunities Fund, which pays steady income every month. And that, my friends, brings us to the end of the first 5. And time for a little recap before we let you folks on YouTube go off to finish your days. So coming in at number 10, we've got the Americold Realty Trust, real estate investment trust that pays steady income and owns cold storage facilities. Number 9, we've got Stag Industrial, ticker symbol STAG, another real estate investment trust. Pays more income, pays it steady, grows those payments whenever it can, and owns light industrial space. Next up is Equity Lifestyle Properties, another real estate investment trust. This one owns mobile home communities, trailer parks, and RV parks. We like it for the income. We like it for the stability in a potentially scary market. Coming in at number 7, not a REIT. We've got Albemarle Corporation. Albemarle is the second biggest or first biggest lithium company, depending on what time of the day you check, in the world. And so, like we said, lithium's a good long-term trend. We love the income, and what with China coming back online, we think that's a good short-term headwind for it, or tailwind for it, as it were. And then our last of the first 5, the Guggenheim Strategic Opportunities Fund, GOF. We love this one because it's just designed to pay us income and to grow that income whenever possible. And we're pretty sure that we're going to need a lot of income coming up in the next weeks, months, and years ahead. So there you have it. That's our first 5 for everybody who watched on YouTube. This is where we leave you. Thank you, as always, for watching. We really hope you enjoyed it. And if you'd like to join us as a full-fledged member of the Wealth Advisory, I highly recommend it. I know I'm a little bit biased, but like I said, look at the gains from last month. You could have easily paid for a subscription with just the first month of the year's gains. And then everything else is pure profit for you after that. So anyway, I hope you'll join us. If you don't worry about it. I'll keep putting these out for you for as long as you'll watch them. So thanks again, and have a great day.